Okay, guys and girls, good afternoon, good evening, good morning. Hope you're all well. Hope you're all having a fantastic weekend. The market opens in a few hours. Gold has been absolutely insane for this last week. And now more than ever is a perfect time to show your discipline within the markets, keep your cool, keep your consistency, and more importantly, follow the structure of what it is that Matthew is posting when it comes to the trades. I know sometimes it's very, very easy to try and think that the sell-off is coming and we're looking for the sell positions and all that other good stuff. But just trust me, I've seen the results that have been coming in this week into the results channel. And for me, this is the exciting thing when it comes to this space, when gold is consistently doing what it's doing. As long as we're catching the moves and we're catching the positions, the entries, that Matthew's calling out are fucking insane. Sometimes I'm like, is he the one moving the markets? Is he the one injecting the capital? So I want all of you on here to get to a point with this where you're so consistent in knowing the strategy, how it works, the ups, the downs, the lefts, the rights. Be okay taking losses. Be okay closing the trade when it is in a little bit of red. And again, if you start to get to a point where the emotions kick in and you're only a little bit in drawdown, be okay being that person, closing the trade, stepping away, and analyzing how you're feeling, analyzing the emotions that you're feeling. It's okay to go through patterns. And it's okay to go through phases, where you are kind of questioning, is this going to work? I've been doing this 9 years now. Matthew's been doing this a hell of a long time. And those around us who are making the type of lifestyle income that we all deserve to have on here, they're disciplined enough to know when to walk away, to know when to, call it a day. So Matthew, mate, I'm going to let you jump on screen share, brother, and let's have another mind-blowing session. 230 on here as per usual. Fantastic. I will
can't share. You just need to allow me to share.
Yeah, I'm gonna make you allowed to make host on here.
Nice.
In fact, what I'm gonna do, bro, from a questions perspective, I'll come back in 10, 15 minutes and we'll answer the questions. But if it gets to the end of it and you're like, you know what, I think I've covered everything and you just want to just drop it off, we can do. But I'm just gonna sit here and listen in as well.
All right, cool. Cheers,
All right,
mate.
bro. See you soon.
Good evening, everyone. Hope you're well. Firstly, I just want to point out and reiterate what Bradley's just said, as I always do. I mean, make some really good points there. If you're new to this, it's quite normal to be losing money, even though you're probably quite frustrated seeing the ridiculous results we're getting. It's all part of the process. There's nothing you can do, no sport, no skill, no job that you can learn overnight that's going to make you money. Okay, part of that is an investment. A lot of people will lose a few £100. They turn around and say it's not for me, or it's a scam, it's this, it's that, the other. Right. The problem is risk management, trade management, and gold is at unprecedented levels. I say it every week, but last week was the same thing again. We caught some just unfathomable moves. 1,000 pips in a day, 1,500 pips a day, 1,800 pips on Friday down. Unfortunately, we didn't sell it down, even though I knew there was a huge drop there. I knew exactly where it was going, right to the pit, in fact, but we couldn't sell it because it actually did not meet our criteria for a sell. And as I mentioned every single week, I don't care what I know is happening. If it doesn't meet my criteria, we're not in the market. So let's get on to how you take the trades effectively. Before we look at the layering, we need to look at trade discipline, because this is a massive key part. It's instrumental to your success. And trade discipline is essentially what it says: following the same structured process for entering and managing each trade, regardless of market conditions, regardless of emotions, and regardless of previous outcomes. That encapsulates into 4 different things. The main things are that you understand that you respect the technical validity of every single trade. A trade of ours, it remains valid as long as the structure has held. If a stop loss is triggered, it simply marks where the idea is no longer valid. That is not a failure. In fact, it's information. Again, I say this every week: a stop loss is your only friend in the market. It's the only thing that likes you. You should not get emotional when you hit it. You should be thankful. It is like a seatbelt in a car. If you have a car crash, it keeps you safe. And for us, because we trade order flow, it means that we're trading in the wrong direction. We'd be really thankful for it, because it's information that the banks aren't aligned with us, and we do not want any part of that trade whatsoever. If that is the case, we only trade in line with the banks with high probability setups, trading towards the money. So if we hit a stop, we say thank you. That's information for us. We move on to the next trade. I want you all to be maintaining consistent position sizing. Avoid that emotional impulsive change in lot size. Stick to a fixed percentage per trade, protect your capital, and reinforce that discipline habit. What that means in layman's terms is you set a risk size or a lot size that is adequate and safe based on your risk management strategy, your own system. And in relation to your equity, we don't give advice on lot sizes. But what's important and what we do advise is to maintain that lot size all week at least based on your equity. If you want to review your equity at the end of the week to increase it or decrease it if you've lost, then of course you can do that. But do not be hitting maybe 6-7 trades back to back in wins, which we do a lot of the time, and then getting brave and increasing it. If you hit a stop loss, you're going to wipe out that equity. Arguably, if we hit a stop loss of 1 or 2 or 3 even, not that we really tend to ever hit them 3 in a row, if you do, you don't decrease your lot size because then it's going to take you much longer. You have to be consistent with everything you do in the market. The next thing you need to remember is you need to be consistent with your profit-taking habits. All of these things are equally as important as one another. You must use a defined take profit strategy, whether that means scaling out or aiming for a fixed TP level. Consistency on how you take your profit is going to allow for that performance review and allow you to improve. What this means is if you take TP1, take TP1 all of the time. If you take TP2, take TP2 all of the time. If you are a take 50% at TP2 and set your stop loss to break even, or at TP1, then do that all of the time. Whatever you choose to do, design your system, get comfortable with your system, have a relationship with your system, and stick to it. Then the last thing I all want you to understand is that the position management guidance we give is there to support you. It is there to help you. I will always continue to provide updates and context around price movement, the trade development. However, your personal risk management, the decisions you make, the exits you make, they should always align with your own strategy and your tolerance, not mine. Essentially, what that means is that I am at these screens. I've got 3 screens. I trade 8 to 10 hours a day on most days. Everything I give you is black and white in real time. If you come to the chart, you come to your phone and it's not at that level, it didn't mean it didn't hit that level. It means I saw it, the data in real time, as I do every single day, and I'm trying to give you as much information so you can make informed decisions on your trades. Moving on to how we layer effectively, I'm going to show you just 2 examples and then potentially open up some questions. We don't really need to talk and drag it on any longer. So let's have a look at how we should be and the 2 different options you've got when scaling in and out of the market. So we have one of our buy zones in front of you. This is where the signal would be coming in at 4203, which is the top of the zone. Okay, this is where I would send the signal as soon as price taps into my zone. I'm sending the signal. As you can see, it is at 4203.7. So I probably would have rounded this one up. But what I do is I call it the first 4 digits. What you're going to do is you're going to open up your phone, MT4, MT5. So long as it matches these first 4 digits, push the buy button. If it doesn't, you can enter up to 5 pips above. You are going to increase your risk. It is going to lower your take profit and widen your stop loss. So I would advise you just to wait to see if it pulls back. If it pulls back to these 4 digits or below, you can enter the market. Before I talk about the layers though, if a price is moved when you get to the market, it's not that we tried to steal pips from you. It's not that we got in at an entry and it's unfair that you got in. Just move on. If it doesn't pull back, don't take the trade. We sent 100 trades last week, albeit that was quite a lot. You don't need to be in every single trade. I encourage you to get in every single trade if you can, but don't be entering late. If it doesn't pull back, skip it. Doesn't matter. It's not going to affect you. The market trades $7 trillion every single day. There will be plenty more opportunities for you to get in the market. Do not FOMO in. If it pulls back, enter. If it doesn't, leave it. What you're going to do when you get the buy 4203, you're going to click the buy button. What you're then going to do is you're going to open up your MT4, MT5, and you're going to set your limits out. 4203. So the next one would be 4202 buy limit. Then you would have 4201 in the market. Then you would have 4,200. Then we'd have 4,199. It's quite a big zone, this one. We've been realizing that actually over the last week, these ranges have been massive. I mean, look at this. These are 1 minute candles. It's like 100 pips nearly. It's wild. The next one would be obviously 4,198. And then pretty much bang on out just over our 50% as we always go, 4,197. Okay, in this example, price has come crashing through our zone, which isn't a problem. This is why we layer in the stack, because we don't know if it will come to the open 25%, 30%, or 50%. So we use the whole stack. In this example, we have a buy position at 4,203. Price has come down and is layered and filled all of our zone, bar actually activated the last one here, 4,207, 4,197. So that means that we now have our best entry at 4,197, and these are all in drawdown. The two options you now have, low risk and how the group is updated. So all the messaging in the groups is based off of what I'm going to show you now, or high risk, which we'll talk in a minute. The low risk option and how the group is updated means that when price comes back through these layers, as soon as they are blue, you close them off. You do not wait for the full stack to be blue, because if we close 2 or 3 of these off, and now we hit the stop loss, it's only on 4 positions, not the full stack. Right? As soon as these positions are blue, we are closing them out, closing them out, closing them out, leaving only your best entry to run to whatever take profit level you see fit. The exits are completely up to you. Everyone's risk tolerances are different. We cannot give you advice on where to exit. You need to work that out for yourself. We are in the signals providing game, not account management. The second option you have when it comes to these layers is that when we are fully layered, you can hold all of the layers to whatever take profit level you like. This is going to massively increase your profitability. It is going to mean that you're in line with the sort of pip count that I get. However, it's increasing your risk quite heavily. Imagine you hit a stop loss from here on the full stack. It means you're going to be quite a loss. So it's really important that you figure out what works for you. If you look at our data, if you look at our stats, way more of our trades go to TP than they hit stop loss. So even if you use this system, you will make money. But whatever you choose to do, it's up to you. And please remember, the group is updated off of the most risk-averse way to trade. So it takes into consideration you closing out these layers as soon as they come into profit, which is why we register the stop losses the way we do. Let's have a look at one more. And again, it is a perfect fully stacked example. We've got a buy zone. The buy zone is 42225. As price comes in, this is where I would be sending the signal. 42225. I've rounded it up because it's 0.7. Again, if it's at the first 4 digits or below, that means you're getting a better entry than me. So press the buy button. In this example, as you can see, we've then got 4223 activated, 4221, 4222 even, and then 4220 and 4219, which is the last position, which didn't get activated, I don't think, in this example. No, didn't, not fully. Well, I did here, actually, tell a lie. Again, this one has perfectly mitigated our zone. We're not panicking because these are running into drawdown. The reason we enter the trade at the open is because sometimes they bounce off the open. Predominantly, they come to the 50%, but we can never guarantee it. So we have to layer in. We need to get the best entry possible to increase our profit. As I've sent the signal, you've seen that you're in the market at 4225. As prices come down, it's activated all your buy limits. As soon as they turn blue, I want you to be closing them off. As they come to blue, we do not wait for the worst entry to be blue. We close them as it comes into them. Because again, if we hit a stop loss halfway through the stack, we only have a couple of positions in the market, not the full stack. If I call stop loss to break even at any point, it means that the full stack is been taken out by myself, or in terms of the most risk averse way to trade. And I want you to set your stop loss to the price given in the chat. What it means is I don't expect price to come back down to the level. And if it does, I don't want to be in the trade anymore because it's showing me signs of maybe a reversal. This is a prime example. We would have done it. This rejection here, and it came into an up close candle here and rejected. That would mean I want my stop loss at break even. And thankfully it didn't come back down and take our worst entry. But that is signs to me that potentially want to push down. In that example, it played out perfectly. It didn't activate the stop loss at break even. But if you are, for whatever reason, you're not completely risk free, or you're not out of your worst position, just set your stop loss to the price I give in the chat. It means you won't hit the full stop loss. You will hit where I no longer want to be in the market anymore. And it means your trade is executed in line with me. And that's it. That's how we layer in. That's how we layer out. Bradley, I don't know if you want to take over and see if there's any questions. If not, that's it, really. You're not listening now.
Sorry, I just realised I had to reclaim host there. No, I mean, in regards to questions and stuff in the chat, there is none, weirdly, tonight.
Brilliant.
which is a
miracle.
A miracle, actually, yeah.
Yeah.
Not that hasn't been already covered anyway. Yeah, nothing, mate, nothing. I've just gone through the tabs at the top, like where people have direct messaged me, and it's just people sharing that they've had a good week.
Yeah,
results are coming in, which is nice. A few people asked about layering, which you covered. How to get in and how to get out, you covered. Chat isn't disabled; it comes straight to me, Martin, so I can read anything like that. Where do you expect the market to go? Could be anywhere.
Yeah. I personally, I mean, 4280 at least. But if we don't take another all-time high, I will be surprised.
Yeah.
So having said that, there's at least a 2,000 pip coming. I can't tell you when, but there is. The amount of sell positions the banks are in down there, massive. They are in millions, if not billions, of drawdown right now.
Drawdown, right? Yeah.
So they will come back down for it. It's not an endless cap on this. But if it doesn't hit all-time high this week again, I will be surprised. But 4280 at least, and then from there, I will decide whether we're selling or buying.
And again, guys, that doesn't mean that just because he said 4280, that doesn't mean that when the market opens, you degenerates go start, clicking buy straight away. For those of you who asked, do you execute straight away on MT5? Yes. Buy or sell as soon as it comes in. When do you expect the market to go again? Do you ever widen your stop loss? No, the stop loss is in place to protect your equity.
If the minute you widen your stop loss, you might as well put your money in a casino. Right.
Or if you guys want to, I'll happily send you our PayPal, and you can just ping the money to there.
So what's really important about our stop losses, guys, is my stop losses are never based off of risk. You never should be setting your stop loss of how much money you're willing to lose based on your equity. That is an ice age archaic way to trade. It's retail. We don't do any of that. The stop loss is where the stop loss needs to be from a technical point of view. From the bit that turns around from where institutional money is, where we no longer want to be part of that. It's not based off of one lot size times my X, none of that nonsense. It's where it needs to be from a technical point of view, and always is. 100%. So no, we never move it.
100%. And I think if the guys on here, there's 260 of us on this call, if we just get to a position where we're so comfortable taking the trades, you remove you out of the equation, it's literally, it cannot be any simpler anymore. The amount of volume of trades that we do, like people used to say, oh, I don't have time because I'm at work. Like we have the entries from 5 a.m. So if you're missing trades, wake up earlier. If you're, if you're at work and, start going for a couple of regular toilet breaks, you hate your job anyway, most of you. So, start using them toilet breaks, start using them 15 minutes usefully. Because someone asked there about what if I work too much? Then get out your own way a little bit, get out your own way. But other than that, mate,
take more of the trades.
Take more of the trades and get a bit more risk averse. So, guys and girls, I don't know if there's any more in the chat. Do you recommend selling and buying at the same time? Absolutely not.
We do it. We haven't done it in a while because I'm not
This no,
looking.
this person meant at exactly the same time.
Oh, right. No, no.
Yeah, exactly the same time. But yeah, we do these calls every Friday, every Sunday, guys. So you don't have to worry about this. They all get uploaded onto my YouTube. So then it's a case of then you can just jump on and watch them. They're all uploaded. This one will probably get uploaded tonight once I'm back from dinner. My starters are going cold as we speak, but it's okay. That's what I'm here for, right? So, are you planning to do more of these calls every Sunday? Every Sunday. So, unless there's anything else you want to cover, mate.
No, I'm good, mate.
Good stuff, right, guys? Well, I'll end this and then I'll upload this onto my YouTube in a couple of hours for those of you who want to go watch it back again and maybe let it sink in a little bit more. But again, every single week we host these calls on a Sunday, and you might be like, Bradley, why are they only 10, 15 minutes? Why are they only 10, 15 minutes? Because it's the same thing week in, week out, week in, week out. We've got 10, 15, 20 videos there now showing all of the strategy, the same thing week in, week out. So, guys, go follow them if you need to watch a little bit more. And if not, we'll see you through the week. Don't forget to share your results, ping them through, because ultimately we want to see you guys win at the same time. And don't be afraid to share, whether it's £1, £10, £50, £100. The numbers don't matter. It shows your progress. So, guys, I appreciate you all. Matthew, as per usual, my friend, I will see you very soon. And have a blessed night. See you in the week. Bye-bye.
Take care, everyone. Bye bye.